So as long as you're trading with the overall direction of trend, you're going to be fine. See, we came into a higher time frame level of demand and we broke the counter trend structure to the upside. So we're creating higher highs and higher lows, not only on the higher time frame, but also on the lower time frame as well. So we've flipped from being capped by the 50 EMA as a resistance to acting as dynamic support, capping price above this EMA here. So we scale into a lower time frame using the EMA as a confluence within our overall smart money system. So we can see here on the lower time frame, we had this huge sell to buy that created the higher high. So these equal highs were formed, and we want to continue to look for buys because we're in an uptrend, but at the same time, we have buy side liquidity resting above. So we scale in even further and see that this happened at exactly the right time of day, 3 in the morning Eastern time. This is London session open, sweeping equal lows. And then we had that failure to generate the lower low, and we had the continuation. So overall, trading with the overall direction of trend, we can understand that based upon our smart money system, this would be that area of demand we're looking for price to come into before continuation's long. So we want to see on the daily time frame price being capped in the current direction. So we are looking to trade long. So it's acting as that dynamic support. We actually came into it right here. But at the same time, the 4-hour time frame is where we want to be seeing the EMA come into our area of interest. So we can see the EMA here. If we come back down, that would be that retest of the EMA. Also the mitigation of the demand based upon our smart money confluences for continuations in the overall direction of trend. So we can see boom, prices hit that entry and started to rise. And there is your setup. What's going on, fellow traders? Hope you guys are doing really well today. And in this video, we're going to be talking all about the concept of the 50 EMA. Have you ever heard of an EMA? It stands for exponential moving average, and it's the average of price over the past X amount of candles or X amount of time. In this case, with the 50 EMA, the past 50 candles, the average of those prices will be used in determining where the EMA rests. Now, why is this important and how can we utilize this in our everyday trading? Well, it's important because the banks use it, right? We want to be following along with the big whales in the market, the big orders and the overall order flow of the market. Now, these institutions use the 50 EMA and they also use the 200. We personally don't use the 200 because we're not trading on the monthly or the weekly time frame. We're more intraday to intra-week traders. I'm sure a lot of you are not swing traders yourselves. So we really want to be looking at the 50 EMA. That's what they use. And it's really helpful in determining mean reversion. If you've ever heard of mean reversion, this is oftentimes when the sentiment of traders oftentimes will when price deviates from the norm, price will oftentimes revert back to the average of price over X amount of time. So for an example, if the EMA is right here and price shoots up very strongly, the sentiment is really overextended to the upside. And oftentimes we will see that retracement to fill imbalance, to reprice ourselves, but to revert back to the average price, that will be when the EMA pushes back up to the upside, right? Because the average of price between here and here within these 50 candles, or really within from here to here within these 50 candles, is sitting in and around this level, which determines where the EMA rests. So oftentimes we will revert back to the mean, and that's what's meant by mean reversion. Also at the same time, this happens because outperformance tends to persist in intermediate term and reverse in the longer term. So what do I mean by this? Well, this is the intermediate term, right? This could be the longer term, right? So the intermediate term, we may be pushing up very, very strongly. Longer term, we may see higher time frame retracements before potentially continuing. So it's always about pushing price in its overall direction, reverting back to the mean, and also filling imbalance, repricing ourselves. This is how the market oftentimes moves. So when we use the EMA in conjunction with all of our other confluences and concepts that we know, then it can be a very powerful tool, right? So we revert back. Now, this is not always going to be precise, and I will say we cannot use the EMA by itself. It is a great reference when determining areas of interest that we're looking for based upon our smart money system, but it cannot be consistently used by itself profitably, most likely, just because you need to have a holistic understanding of the market. And that is why having the understanding of higher time frame order flow is very important. Now, we are only looking for using the 50 EMA on the daily and 4 hour, sometimes on the 1 hour time frame. Usually on the lower time frames, the EMAs can be misleading and misguiding in terms of, where you should be getting in the overall direction. But the higher time frame you go, the more dynamic support or dynamic resistance price is being capped with. and the overall direction can be continued and identified. So what do I mean by this? Now let's look at the higher time frame here on AUD USD. Now within AUD USD, we have come into a higher time frame level of demand. This can be indicated here through this huge sell to buy repricing continuation. So before even looking at the EMA, we understand that that's an area of demand after price has made our higher high on a higher time frame. We have retraced and have come finally into that level. Now we have to look at the lower time frame, the 4-hour time frame and lower, to determine the counter trend. So we can see that we are forming lower lows, lower highs. We finally stopped, failed to generate a lower low, and instead made a higher high. So now, having reacted from this level and now pushing to the upside, we are making higher highs and higher lows. So we are going with and trading with not only the higher time frame trend, but at the same time the lower time frame trend. So the EMA is used beautifully when the higher and lower time frame trends are in alignment with each other. And we can see we were acting, this EMA was reverting back to the mean, or the price was reverting back every single time we deviated from it. The sentiment of the traders when we were overextended in this particular direction, we come back up to fill in balance, retest prior levels of supply, all incorporating our smart money strategy into it. Right? We revert back, and then we continue in the overall direction. Now we can see that the reason why we busted through this 50 EMA here on the daily time frame is because we came into this level and now we're starting to extend to the upside. So that's why we have to use it in conjunction with all of our other confluences. So the 50 EMA here is acting as dynamic resistance when we were down in here. Now we finally broke, and now it's starting to act as that dynamic support, guiding price to the upside, gives us that confluence not only with our area of demand on the higher time frame and market structure, but the fact that we can be confident that when price retraces into this EMA, it may have a reaction from it and continue within the overall direction. Now, it doesn't mean to just buy it right when the EMA touches, because obviously the EMA is a lagging indicator. However, it can be used to identify dynamic support and resistance and where price is likely to go based upon where the EMA or the average of price is. So let's take a look at a few examples here and show how we can utilize the EMA within this. So now, first and foremost, when we have to identify the higher time frame order flow. Where is price headed? Where is the overall order flow headed? Right. So we are in a bullish market, making higher highs and higher lows. Obviously, we identified that higher time frame level of demand that we came into, and then we failed to generate the lower low when we broke the counter trend structure to the upside. Right now, we're starting to make higher highs and higher lows. So now we can just be confident in that market structure. So continuing, what we want to see is we want to see the daily time frame capping price in a particular direction. So if we are bullish, we want to see the EMA below it, capping it as dynamic support. And we can see that here. So our area of interest we'll be talking about is going to be centered around this level. Now, this is the beginning of January 2023, so this past year. Right? So this will be the setup that we talk about. And we can just see that we've come into this EMA once, twice, 3 times, 4 times, even 5 times here, acting as dynamic support, not wanting to break through it, and most importantly, not wanting to break structure. Right? So we are continuing to make higher highs and higher lows in this sequence. Right? So following the overall order flow, and now where is the EMA within that order flow? So we just saw on the daily time frame that we were acting as dynamic support. Now let's go down to the 4-hour time frame. So we can see here that we can see prices making higher highs, overall pullback, higher low. This is not a higher high, but it's good enough for a pullback to continue long because we've created equal highs. And for those of you who have taken our Smart Money course, you will know that how do we know that price is going to fail to come below a previous swing point is if price makes a higher high or makes relatively equal highs, because that generates what? Buy side liquidity, and that is usually run in the current direction of trend. So we've created buy side liquidity, and in the process of doing so, we have created equal lows. So this was Monday, December 26th, all the way through Thursday, December 29th. So about 3 days worth of price action. We finally came down. We swept that liquidity. And at what time of the day did this occur? Again, using our smart money confluences, time and price. Okay, so time and price occurred here 3 a.m. Eastern Standard Time. That is London session open. So that's about 8 a.m. GMT. So we sweep that liquidity. And within the counter trend, for those who understand supply to demand flips, this is our supply level. We pulled back into it. We failed to generate a lower low within this counter trend, and instead we made a higher high in the overall direction of the market. So now we have the understanding that this can be a level of demand. Now, even if the EMA wasn't even here, we would still be looking to trade this zone. So I know you're probably thinking, well, why even use the EMA when you're already having the understanding that you're going to be buying it from this demand anyways? That is true. However, to give it a higher probability, you can use the EMA as your dynamic support and resistance to help guide your entries. So in this particular situation where we talked about the 4-hour and the daily, when it comes down to understanding the EMA, lower time frame, not so much, just because it can misguide you, but higher time frame, it's a lot better. Now, we've made that higher high. We want to pull down into that level of demand. So let me just mark that off really quick right in here. Stops are below this overall low. So we can see that when we created that higher high, I'm just going to use bar replay here and show you. We can see the EMA is not only below price acting as that dynamic support, but at the same time, it's within that area of interest that upon the pullback, we can revert back to the mean of price, which would tap into that level of demand, give it that extra confluence and probability to continue higher. So let's play it out. We obviously know what happens with it. We came into that perfectly. Now, this does not mean in here that when we close or break through this EMA that we should be looking to sell it. Same thing within here, closing below it, we should not be looking to sell it, right? So we can't just be utilizing it by itself and say, oh, if we push up above it or below it or whatever, we need to be buying or selling upon the breaks or retests of it, right? That's not the case. We only utilize it within our overall smart money confluences and the system that we have known and have utilized for years and years and years, right? So in this case, we acted as that dynamic support. We came back down, reverted back to the mean, and now price has mitigated that level of demand and we can continue long. So that's exactly what happens, and it's a very highly probable setup. So now we've come back above the previous high. Now stops can be moved to break even, partials can be taken there. So that's one example. Now we're also going to look at USD JPY and how this works in a counter trend type of fashion. Right now, we're going to be looking at 3 different examples within USD JPY and determining which one is the most highly probable by building confluence. All right. So in this situation, USD JPY, we're looking for sells from this level of supply. We are currently in an overall downtrend. Lower lows, lower highs, lower lows, lower highs. Now we had an intermediate level of supply in here that we ended up breaking through, and then we had another level of supply that we wanted to short from. We have equal highs on the higher time frame right in here, just about. So we want price to be taking out these lows. Or excuse me, equal lows. If I said equal highs, I apologize. Equal lows. So sell side liquidity rests below it. So in an enduring downtrend that we're in here, we want to be attacking sell side liquidity, which is where I think price can come into. So at least at 125, maybe 126 level. So within that, we want to be looking for sells. So now we know the overall direction of the market. We bust through this first area of supply because technically this is a lower low, lower high, lower low. So we could be trading off that, which I think we did, but we never ended up following through. We ended up pulling back, having that overall retracement to then be looking for shorts again from our higher time frame level, which we called out. So when price is entering into this level, what we want to see is not necessarily just a push up into it and then a reaction and then just immediately look to sell. We have to follow market structure on a lower time frame, and we can even utilize the EMAs when determining where we should be getting in. Now we can see in here that price is still acting as that dynamic support. So we haven't busted through it, but that does not mean we can't be taking shorts here. If you sold it from that level, you would have been fine. Stops would have had to have gone above this previous high because this is the overall high that generated this overall low here, or really this overall low down in here. So not above that intermediate high when you could have done that, but really above that high, that would have been better. All right, so in this situation, if you didn't place that entry, that's fine. We're acting as that dynamic support. So now let's scale into a lower time frame and see if we get any reactions. Again, there is no reason we should be looking for sells upon the lower time frame breaks until we break at least this level, right? So we come up into this level. This is our previous low. We come up into it. We need to break this low before looking for pullbacks to short. So that would have been a very highly probable entry, not only because you have your higher time frame order flow, which is bearish. You would have the lower time frame order flow. In this case, if we actually broke this counter trend structure, then the lower time frame order flow would also be bearish. But then also at that point, the 1 hour 50 EMA would probably be pushing down in here. So obviously don't look at this EMA because price ended up continuing, but if price fell, the average of price within the past 50 candles, which is being updated every single candle, will start to push down. Then if we get a retracement, maybe back up into a level of supply, so we could, react off this level, go like this, push down, that would act as that failure to generate the higher high, that that demand to supply flip. The EMA would be pushing through, and upon that retest of that supply, we could tap into that EMA, give us a really good confluence for continuations. That would be something that I would look for, a highly probable setup like that, because we have the EMA confluence in there as well. So let's look at the 4 hour. I know we talked about how we look at the 4 and the daily. So the 4 hour time frame, we're still above it, but price is still above it here. But if price fell and we pulled back, well, then this EMA would have started to shift and we could have hit that and then went lower, right? So how it works is very, very important into understanding our entries, but also can give us a very highly probable entry, right? Highly probable setup. So now we're going to look at something that's not as highly probable, but still probable. And in this case, it just happens to be from the 4 hour level, right? If you were to just take price from that level, put stops above the high, you would have been fine. You would have been in profit right now for sure. But what we don't have is we don't have the EMA confluence, and we don't have a lower time frame confluence, right? So the higher time frame is still bearish, right? So that's a confluence. The lower time frame is not. We're still bullish. And the EMA, we are being capped by it here. So let's check the daily. We want to see if we're being capped by it at that time. And at that point, we would be above this EMA. This does not mean we're shifting above it. It just means that price could be coming back up into a higher time frame level, sweeping liquidity before continuing short like it is. And now we can see that the daily 50 is now resting above it, which could be slowly looking to cap price, and we continue lower. Right? So the not as highly probable setup would just be to sell it from that level. And you can do that at half risk. Sell it at half risk, put your stop above the high. And then if we have lower time frame confluence, which I'll go over in a little while, then we can add the additional risk to it. Now, what is the least probable setup? The least probable setup is having none of those confluences. The only confluence that we would have here is if we look to sell it within this imbalance, because we saw that we broke this lower time frame structure here, right, and made a lower low, so we wanted to pull back into that imbalance, but we have no EMA confluence. The higher time frame is still, yes, is bearish, but we're still technically bullish. We came into a prior level of demand. We could easily make a higher high, which we did. And the EMA is still pointing to the upside. We're still being capped by price, or price is still being capped by the dynamic support that's showing within this EMA. So how can we trade it now? Well, we have to be patient. Understanding that our stops are above that high if you took it from a sell from this level, or even if you didn't and you wanted to wait for reactions from that level of supply, we finally had that high, that pullback into demand that failed to generate the higher high and then the lower low. So we finally have broken structure, and look what happens to the EMA. Now the EMA starts to shift. The 4 hour 50 is now above price. We are now down in here. So now not only have we followed the higher time frame structure via that supply, but now the lower time frame has been broken, but also the EMA is starting to shift below it. So now pullbacks into that EMA, or at least retests of the mean, would be appropriate. But again, still using it in conjunction with our overall confluences. So in this case, we have equal highs. So really we want price to push back up into that area of supply. So where's the EMA in regards to this? Well, the EMA is down here. So is this a highly probable zone? Still yes, but because what we could see is a buy to sell, right? Equal highs, buy to sell into that level, following the overall structure and order flow. And at that time, the EMA will go like this because price would then be up here. And then when price falls through, it'll start to curve down. And then we can be looking for additional positions. That would be a very highly probable mitigation, because then we'd have that EMA confluence as well for continuation short. All right, so that's how we can use the EMA in conjunction with each other, or with the smart money confluences that we teach and that we trade. So guys, of course, if you have any questions, feel free to let me know. And remember, we cannot use the EMA by itself. It has to be used in conjunction with our smart money trading system or your other trading system that you may have on your own. All right, use it as a confluence and have a more highly probable setup if the EMAs are following order flow and if the EMAs are in your levels of interest that you are already identifying anyways. So guys, if you want to learn more about how we do this on a day-to-day basis and take these types of trades and really learn the proper skill set and the confluences needed to appropriately have highly probable setups to be very consistent, feel free to head over to my website, aerialfxtrading.com. Just book a free call with me. All I want to do is chit chat. We'll just talk about where you are in your trading, how we can best assist you if we can, because we may not be for everyone. We want to make sure that this is the right fit for you. If you resonate with this strategy and want to learn more about how we can increase that win rate and get more highly probable setups just through this easy indicator that the actual institutions use themselves, then we would love to teach you more about it in the more intricate details. So guys, have a great rest of your day and stay tuned for more videos like this. Take care.